Now, Natalie Molina-Nino, O-Cubed builder capital investor and author of Leapfrog, the new revolution for women entrepreneurs. Natalie, good to have you. So, I mean, there are a lot of kind of theories, conspiracy theories on why is Robinhood really motivated to do the things it does. But it seems to me the most likely explanation is Robinhood is set up to try to be the Facebook of trading. It wants to keep people engaged and spending, win or lose, which may or may not be in the individual investor's best interest.
Yeah, I mean, I like that you mentioned Facebook, right? At the end of the day, who is Facebook's customer? Is it the end user or is it the people they sell massive amounts of lucrative data to, right? And I think that the same thing is true here. Who is Robinhood's true customer? Is it the end user? Or is it the people who get a slice like Citadel of every single transaction that goes through their platform, right? Those people happen to be tied, obviously, to Wall Street. Wall Street and, Silicon Valley are not that disconnected, right? You've got people like Steve Cohen who were investing in a company like Quantopian that went under, right? And as recently as October, the founders of that company, where did they go? They rolled into Robinhood, right? These are all interconnected companies. And I feel bad for the founders in the middle of this because the people that they're invested in and the people that are ultimately their true customers, like Citadel, are pushing them for short-term returns and short-term outcomes. When if you're a founder and you're trying to build a business that's going to last, if you're trying to build something that is truly for the long haul, you've got all sorts of people whispering and actually enforcing, right, that you make decisions that are about the short term, not about making sure that your company exists in 10 years or that your employees even have jobs in 10 years.
A point taken about who the customer is. I mean, I would argue Facebook isn't really selling the data. It's selling the fact that Facebook can target because Facebook has proprietary access to the data. But the value of data underlying both cases seems to me to be the important thing. Who gets smart over that access to massive amounts of data? And though we're talking about this in terms of democratization, in both cases, it's the big companies with big funding and resources who get access to that data because they're able to look at what the little people are doing, right?
Yes, and I want to go back to the fact that if I'm being told that this is no commissions and no fees, and I'm not being told that actually every time I take an interest in a stock, somebody else is getting a heads up and then they're selling it to me at a little bit of a premium, no matter how small it is, I think that when we talk about democratization to anyone about anything, it needs to come with full transparency, and we don't have that. And that's what I think this hearing is going to be interesting for, right, which is the idea that if you're going to go to the effort, and I think it's an honorable effort, to democratize anything, that's got to come with responsibility, right? Anybody can buy a car, but not everybody can drive a car without a license, right? It's got to come with education and it's got to come with transparency. If I was building a movement of millions of people that were going to go on Robinhood and we were going to move the power to the people, then I want to know exactly who's benefiting from each of my transactions. I want full transparency about the rates and who every single day is actually making out with a slice of the pie.
Yeah, certainly transparency is going to be front and center today, Natalie. But I'm curious about transparency about another thing, which is the cap table, the people who are the investors in Robinhood. It sounds like you think that there may be some conflicts of interest there around the cap table, or what you call an incestuous set of investors there. Explain what you mean by that.
People scratch each other's backs, right? And I think that it's a lot of a closed network here, right? So yes, as I mentioned, you've got investors that invest together regularly. Investors that when companies fold, they fold them and their founders into each other's companies. It's hard for me to imagine that the same guys that invest together, right, the Steve Cohens and the Andreessens of the world, aren't also talking about what's happened when a company is cannibalizing one of my other companies. Like, they invest together, they work together, they collaborate. Why would they not be collaborating in an environment like this? I'm not suggesting that anything illegal happened, but I am saying that, yes, as your point, stands, transparency involves knowing who the players are, who's getting a slice of the pie, and also what's their motivation. Again, I go back to venture capital, just like trading, is designed to be short-term oriented. They don't actually care if the company's around in 10 years. They care that they get an exit as soon as possible so that they can have liquidity and show that the return on investment on their fund, whoever, if it's Sequoia, if it's Andreessen, whoever's invested in the cap table, they just care that they have their moment of liquidity. They don't care if the next day the company disappears. They got their out.
Shepard Smith here. Thanks for watching CNBC on YouTube.